Hi everybody, my name is Randall Morrow with RESNN Investments, and today we're going to talk about the advantages of adding real estate to your investment portfolio and why you would want to do that. And first I just want to start with a basic definition of what I mean by real estate. If you're driving down the street, pretty much any building that you see is available as an investment in real estate. And that can include apartment complexes, office buildings, medical, industrial, even single family homes can be purchased and then used as an investment. For a particular example, let's assume an apartment complex where you have a building that has multiple apartments in it and obviously multiple tenants that are paying you rent on a monthly basis. So the income generated is basically rent from that building. And obviously you're going to pay taxes on it just like you would with an investment in the stock market. So let's talk about why you would want to do this. The first is that it provides an amazing diversification technique from the volatility of the stock market. As you know, stock markets over long periods of time, certainly historically, they've just gone up. But over a 3 month, 6 month, even a year, sometimes multiple year period, the market can go down sometimes as much as 50%. And so if you've ever gone through any of those heavy declines, I'm sure you know, it's pretty scary when that's occurring, even though in the back of your mind, you know that eventually the market's going to go up and it's going to recover from those losses. And so adding real estate can really help you with those scary moments where you know that, yes, my stock market portfolio is down, but my real estate portfolio is up or is steady. And therefore, as a result, you're not, as concerned. It helps you to basically sleep at night. So it can really mellow out those volatile moments in the stock market when you look at your overall portfolio. The second huge advantage is investing in real estate is heavily tax advantaged. There is a thing called depreciation that basically makes it so that, to use the example of the apartment complex, again, you're receiving checks every month, yet on your taxes, you actually are able to show a loss for that piece of property, even though you're generating income constantly. So it is a huge benefit for high income W-2 wage earners or high net worth individuals that are looking to lower their taxable income. The third advantage is that it provides a reliable income stream. And again, for the apartment complex, every month you're getting those checks. And I don't want to say guaranteed income stream. Reliable is a better word, because if you think again about an apartment complex, you have to remember that occasionally you're going to have a tenant that's not going to pay their rent, or you might have a vacancy. There will be periods of time where you're not going to have consistent income, but in general, as a whole, it's fairly consistent. Now, with that said, you can achieve that particular advantage in the stock market by investing in dividend producing stocks, where obviously you're getting a check from them on a quarterly basis. It's very consistent, and in terms of taxes, it's handled very similarly. Diversification, tax advantages, and income stream are three fantastic advantages in real estate, and in particular in what I call direct real estate, which is investing yourself in something, putting your money directly in and handling the daily issues that occur with that property. And it could be the way you handle it is by hiring a management company to do that. But the point is that ultimately you are directly making those decisions and directly responsible for the property and the investment. There's a second type of real estate investment called real estate private equity, which is slightly different than direct real estate. So private equity real estate, basically you are investing in a company that is ultimately going to invest in a real estate property or series of properties, multiple properties. And as a result, you are not handling that day-to-day operation of the company and of the building. You're passively invested. So understand that there's a difference between direct real estate and private equity investing. The above things that we talked about were applied to both, But now I want to cover the advantages of investing in private equity versus direct. So first of all, just to define what private equity investing is ultimately you are investing a chunk of money into a deal that the private equity company handles for you. And so the advantages of that is, first of all, it's significantly less expensive for you. So if you imagine a $30 million apartment complex, if you were to invest directly, you obviously have to come up with all that money yourself. You know, you can get loans, but you have to come up with a huge chunk, multiple millions of dollars to do so. If you invest in a private equity deal, you're investing with a whole bunch of other partners and you're all pooling your money together to come up with that $30 million. So you can imagine you're having to come up with significantly less money. And a typical private equity deal has an investment minimum of $50,000. Some are more. So you can invest in a $30 million apartment complex for $50,000 and you're a partner in the deal. You own a chunk of it. Obviously a smaller chunk, but you own a chunk of it. So it gives you the ability not only to invest in properties, but larger properties or multiple properties. So instead of being able to invest in one house that you would rent, you could take that same amount of money and invest in multiple deals that are investing in apartment complexes or high-rise office buildings or storage rental facilities and so on and so forth. So it does give you a lot more diversification as a result. The huge advantage of private equity over direct real estate is that it's completely hands-off. It's a passive investment, and a lot of people say real estate is passive, but I would argue it's not, because at the end of the day, at 3 a.m, you wake up in a sweat, worried, about your real estate property. And even if you have management handling it, you still ultimately at the end of the day are responsible. And with a real estate private equity fund, you aren't. Your only responsibility is the check that you write in the beginning. You are what's called a limited partner, which means you have limited liability if something were to go wrong. So if you imagine, again, the apartment complex, and imagine that what could go wrong in that apartment complex, you can talk about someone falling and hurting themselves, or some kind of crime that occurred, or an event like a roof caving in or something like that. In direct real estate, you are ultimately responsible for that. And so there's a huge liability. In private equity real estate, you are not. You are what's called a limited partner. And as a result, your only responsibility is the check that you wrote at the beginning. So in that scenario where there is a lawsuit and they come after the private equity company, your biggest risk, your only risk, is that you can lose your original investment, which would be horrendous. But if you would imagine that, again, someone were to fall and sue your company for $10 million, you potentially are losing $50,000, your original investment, while the company is on the hook for the So it has a huge advantage in that you are protected liability-wise, which is obviously ridiculously important. And the last real advantage of real estate private equity is that you really don't need a lot of knowledge about managing real estate, about running real estate. You're relying on the general partner to handle the day-to-day activity. With that said, I think it's important to understand that certainly if you know something about real estate, it's going to allow you to vet the deals. But obviously, if you have no knowledge, it's a lot harder to figure out when you're looking at two deals which is the better of the two, which one is ultimately going to make you money and which one might not make you money. I want to be a little careful in saying you don't need to know anything, but at the same time, when you look at that, comparing that to direct real estate where you're running the business on a daily basis, certainly less knowledge applies in this situation. Hopefully that helps you to understand the advantages of why you would want to add real estate to your investment portfolio. In summary, the huge advantages are diversification, massive tax benefits, and the income generated. I hope you'll consider adding real estate in the future and certainly looking at alternative investments for your stock market portfolio. Again, my name is Randall Morrow, and I thank you for your time.